Hello, hello. Dan Friedman here.
Hello, hello, Brian Beck.
Hello, Brian.
How you doing?
Good, good, good. Thank you for asking. Today we're going to talk about what to do, special edition before the April 15th tax deadline, and a couple ideas going forward for 2025. Brian, can you give us a couple, maybe even three things that folks can still do to save money on their 2024 income taxes?
Yeah, I mean, obviously, the number one thing is making sure if you haven't maxed out your HSA, it seems like most people have them, that you go ahead and you can true that all the way up to the max. The same could be said for an IRA to see if your income and you can either do an IRA deduction or you could do what we like to do, the backdoor Roth, which is make a non-deductible IRA contribution, put it into cash, and then immediately convert it to a Roth IRA. So if your income is too high, where you can't get a deductible IRA or you can't make a Roth IRA contribution, you could do the backdoor Roth. And then also, if you have a small business, we all know your filing deadline to make contributions to a retirement plan, whether that's a Unit K or a regular profit sharing plan, that goes until extensions. However, if you have a SEP IRA or a simple IRA, those have to be funded by April 15th.
Excellent, excellent. So, and that, things around the edges, but you start putting them all together, Brian, it can amount to, several $1,000s. And while you're in Florida, there's no state income tax. These would also be taxes that you could save on a place like Connecticut, where we are. One of the other things that we've already gamed out for some folks, our subscribers in particular, is where they're going to land April 15th. We call those Q4 tax approximations. By now, most people should have received their W-2s and 1099s and other tax documents, 1098s, won't get into everything. So there still is time to do an approximation to give you a couple months to figure out where you're going to be. Because I know, Brian, one of your favorite WMGNA podcasts was the one about the double and God forbid the triple whammy. Can you just remind everyone what we mean when we talk about those two?
Yeah, I mean, right now is a very interesting time as we see in the stock market what's going on for the rest of the year. So if you don't know how much you're going to owe, you could run into the double or the triple whammy, which is all of a sudden you come to April 1st or April 15th, the last day, and you end up owing money. And then all of a sudden you have to sell stocks. And guess what? In the next couple months, if the stock market all of a sudden takes a swoon dive, you're caught selling at a low. And then the other thing is you may have to pay penalties and interest. And you're trying to avoid that. Now it's too late because it's after January 15th to eliminate any penalties and interest. But my suggestion now is if you can run a rough estimate of what you think, or if you're going to owe, how much you're going to owe. And now is not a bad time to sell if the market is still, even though it's down a little bit year to date. If it continues to slide, you have profits from last year, sell it before there's a huge market correction. So otherwise, everybody in your situation is going to be selling between April 1st and April 15th. And if that's the case, and we have other bad economic news, you could see a huge decrease in the market. So we want to try to avoid that.
Excellent, excellent. Well, I would say most of the market indexes are up. And one place you could go to do a tax approximation, dinkytown.net has some really cool free tax calculators. So that's good stuff, Brian, on avoiding the double and triple whammy. So what are some ideas to avoid being in this situation same time next year, to get off that hamster wheel of waiting and guessing, all that stuff? A couple things that we're talking to folks about right now as regular course of action is to take a look at your current withholdings. Maybe there was a pay raise. Maybe you've consistently owed money in the past. Take a look at what your paychecks are so far this year. Or maybe you wait if you're getting a bonus or you're getting some restricted stock units. Usually the first quarter by April 15th, you'll have a general idea of where you are. And then again, using some free tax approximation software out there, you can take a look at your withholdings and adjust them. Distributions, are you taking money out of things this year to pay your bills? If you've stopped working or you're working part-time, you're in a different phase of restylement where you're not full-time W-2, or there's college bills, or there's a wedding that you have to pay for, or a bat mitzvah to pay for. Where's that money going to come from? And have a tax out strategy on that. Contributions. Again, with standard deduction, itemized deduction is confusing. A lot of people miss out on getting a tax savings on charitable contributions or gifting appreciated assets instead of writing a check. What are your expenses? Maybe a quick cash flow analysis. Everything's going up. Inflation continues to eat away at our purchasing power. Take a look at what's coming in and what's going out. And are there places to save money? And then again, it should be an ongoing process, should be automated. Again, information and technology allows regular middle class millionaires to figure out how to take tax losses without being out of the market, if you will. I know we're up against time. I can see our producer Peter starting to give me the roll around. Brian, quickly, there are some folks who have, because of natural disasters, the poor folks who went through the wildfires and the hurricanes and the mudslides and all that stuff. Can you update our faithful listeners on what that looks like?
Yeah, so if you are in Alabama, Georgia, North Carolina, and South Carolina, some parts of Florida, Tennessee, and Virginia, your deadline is extended to May 1st, which also includes, contributions for HSAs, IRAs, and all this other stuff, and including extensions. And if you're in California, that gets extended to October because of the unfortunate wildfires there.
All right, excellent, excellent, great stuff. Hey, listen, folks, if you or anyone near and dear to you could use a quick 18-minute tax out conversation, get in touch with us, 860-679-5255, or an email to Daniel or Brian at WMGNA.com, because here at WMGNA Tax Out Financial Solutions, we figure it out for you.